Why is the central collecting the tax and then disbursing it? Why are states not using their own tax they collect for their own development? If I'm in Lagos and I collect the Lagos tax, I should use it to develop Lagos. If I'm in Edo and I collect Edo tax, I should use it to develop Edo. Why do we have this system? And people make a case that, okay, it will cause a form of imbalance in the rest, that one state will develop at a very high rate, another state will develop at a very low rate. But the question is, we see that in UAE, Dubai is developing more than all of Arab Emirates. So why are we not in that same format?
In certain states, I've collected the input.
Yeah.
I've collected the tax on the input.
Yeah.
And I'm now making sales in another state.
Yeah.
Are you getting me?
Yeah.
How am I going to retrieve the taxes I've paid in another state, especially the input? How am I going to retrieve it? And I'm now going to now net it off from the one I now want to sell to another state.
How do you guys want to capture those people selling appliances in stores like Yalaba, spare parts in Ladikbo, that they have 15 stores, 20 stores, and they are churning hundreds of millions, but they are still not your multinationals at the forefront?
So you are absolutely correct. I mean, we have a lot of silent billionaires in those places.
You have a lot of
they're making their cool cash and nobody is looking at them.
You could see that consumer behavior is shifting in terms of how they consume content. So they want to hear directly from people that the question is not rehearsed or not sent before. And there was a drama around it. So that's why I'm like, okay, let's do this. We're focused on African economic policies. We're focused on business education. Let's do this, but let's not have a rehearsed style whereby there are questions and you have the answer already. Let's just have conversation so young people can buy in on how the African economy works and how they can use it to also enrich themselves and get better. That's my take on it. But thank you for coming, Akin. It's episode 1.
Thank you, Kelechi, my friend. It's been a long time, but I appreciate for bringing me into this show. So, but like you said, Kamala Harris went into the traditional media to probably pursue his campaign ambition and everything. But why the other guy went to? So that is to tell you that the focus is shifting from the traditional media to the news media. I mean, to the podcast and all of that. And like you said, the conversation are not censored before the time, and that also give people some sense of trust to say that, okay, this guy is actually real. It's not something that they've already proofread and all of that. So I think that's where the issue is coming from.
We can also see it with consumer behavior in terms of TV.
Yeah.
DSTV lost 3 million subscribers.
Wow. Yeah, I agree with you.
Omoni Oboli Odogo movie did 13 million views in 6 days. So consumer behavior is changing. People are moving from traditional TV to YouTube. And what happens is that people will now have their dedicated channel, which they are logged on to consume. So for creators, it's a big boom. If you can create a worthy show, a worthy channel, people can come in and just enjoy. You always have repeat customers and repeat consumers, and repeat consumer means more ad dollars for you in terms of YouTube, and also in terms of, okay, brands will also shift to channels, YouTube channels. They will move away from TV, so put it on Super Sport. Let me go and put it on a YouTube channel whereby they have like static audience, and their audience come in every week, and I can reach my target audience that way. So it helps marketing too. So if you're a creator, if you have the creative juice running through you, please start up something and build a channel. It takes time. So it's not 1 week, it's not 2, it's not even a year journey. It's gonna take a while. But that's not the conversation.
Yeah, I agree with you. I mean, I'm part of people that is shifting, because even I myself, I don't even subscribe to any cable TV anymore. I mean, I just have my fiber optics and I log into my YouTube and maybe Netflix or Prime Video, and then I do whatever I want to do there. And I don't think I've ever felt, I never missed DSTV, or don't let us mention name.
But it's fine. But that's not the conversation. The conversation is, there's a new tax bill that have gone through readings, and there's also been public reading on it.
Yeah, I agree.
And I think that's why I brought you. You're one of the best accountants I've worked with. I think you were instrumental to my success in a company I worked for in 2 years. But we'll dive more on that when we talk about the other part of our conversation. But my question to you would be, why do we need a new tax bill? Is the old one not working?
Well, let me just say, partially, the old one, like you said, is old, and they are beginning to be outdated in terms of our current economic reality. Yeah, to be honest, for instance, the stamp duties are the last time it was reviewed was 1939. I believe you can count how many people that were alive as at that time, 1939. And you look at the Company Income Tax Act, has been a long time. You look at the Value Added Tax Act, has been a long time. And when you look at the economic landscape of the world, things has really moved. So Nigeria cannot afford to be lagging behind. And that's one of the reasons why we need a new tax act for us to be able to move. And again, looking at the previous act, a lot of things are not actually working in the current tax law, and some things in the current tax law are causing some economic distortion.
Things like what?
Okay, for instance, there are companies that are actually in the free trade zones.
Okay.
So, company in the free trade zone, they are by law they are expected to be exporting their produce. So, but currently, some of them had abused the privilege, because if you are in the free trade zone, you are exempted from all taxes in Nigeria, because it is assumed that you are in your offshore country, you are not in Nigeria.
Okay.
Yes, those are special economic zones that are created for investment purposes, so that people can to drive foreign direct investment into the country. So it is expected that you are supposed to be exporting your products. So, but some of them, they now come to the custom territories. Custom territories are any places outside the free trade zone. Okay. Like maybe outside the free trade zone is referred to custom territories. So they come to custom territories to now sell their products. I mean, why you're not going to pay tax? I mean, why people that are companies in the custom territories, they also produce that same thing, and they will now sell at almost the same price or higher than yours. And don't forget, me in the free trade zone, I'm not paying tax.
Yeah.
Me in the custom territory, I'm paying tax. There's a high likelihood that my own pricing is going to be higher than yours. And if people in the free trade zone, they're also the big guys. They can price out the people in the companies in the custom territories. And you can imagine that is the amount of economic distortion that is creating. And as a result of that, the company in the custom territories, they won't pay tax. I mean, they will pay tax, you get, but again, they will now also be fighting with low sales.
Yeah.
And the company in the free trade zone, they will have a lot of income, revenue, and yet they will not pay tax.
So what's the criteria of entering into a free trade zone for a young business leader?
Well, it's just a matter of you applying to the Ministry of Trade and Investment, trying to present whatever you want to take in there as something of economic value.
Okay.
Yeah, so there's some application you need to do. You need to justify what you want to be doing in there as something of economic value to Nigeria economic landscape. Yeah, so that way you can now be designated as a company in the free trade zone. It's a certain zone. So first thing, you need to also be in that geographical area. Yeah, you need to be in that geographical area for you to be able to be classified as a free trade zone. Then you need to also do some application to the Ministry of Trade and Investment to say that, okay, this is what we'll be doing, this is how beneficial it's going to be. And, so basically, if the products are not in commercial quantity in Nigeria and you now have the privilege to produce such, like for instance, the Dangote refinery is in the free trade zone. Yeah, so many companies are in the free trade zone in Lekki, and we have several free trade zones across the country. Yeah. So, and we have several companies in there.
Mhm.
So, but the companies that are privileged to be there by the virtue of them being able to prove their case,
Mhm.
and by the virtue of what they do,
Mhm.
they don't pay tax. They are exempted from all form of taxes, apart from the application fee that you have to pay, and maybe some registration fees and all of that. So that's one of the reasons why we need the new tax law, because the new tax law has mandated all companies in the free trade zone. The moment you are there, you are expected to export your products.
How would they check?
Yeah, they could check. So that's where some of the technologies will come in
Okay.
to say that where am I selling my product to?
Okay.
If we check some countries like Rwanda and I think Ghana,
Mhm.
there's a way they track their sales. Yeah, they track their sales through. So they have like a populated sales number from tax authority. Yeah, because they have the technology that have been infused into your software
Okay.
that will now tell the tax authority where you make the sales. Is it exported? Because obviously, if it was exported, you are going to go through the sea port, or you go through the airport, or the land border.
Mhm.
So that way, there's a way you can check whether I'm exporting my products or I'm selling internally. So the tax reform bill is saying that if you are selling internally, we did not say you should not sell internally, but you're going to pay tax as against what is currently being done.
Okay, so if you are selling internally, you're going to pay tax, but if you're moving those products abroad, you're not going to pay
You are
tax.
not going to pay tax.
And
Because the idea is for Nigeria to shore up the balance of trade,
Okay.
where we want to export more than we import.
I think it will also help with the FX.
Yes, it will also help with the FX.
Hmm.
Yeah, it will also help with the FX. So that's the reason why. That's one of the reasons, not even the only reason. That's
Okay.
one of the reasons why we need a new tax reform bill. I mean, to balance the economic.
I want to touch on the point about that tax bill. There have been so many political rancor around it.
Yeah.
As in, I've watched the media. I don't want to call names. I've watched the media, and I've seen some well-serving senators go on and say, okay, it doesn't work for them. And it's because I think it's the sharing formula.
Yeah.
I think the new one they passed, there was so much concession on the sharing formula.
Yeah.
More than what was projected on the tax bill. But if you don't mind, can you just help me understand what's the sharing formula, what we had before, and what's the current one, and why this one is important?
Oh, well, when you look at what we had before, I mean, currently, what we have now is, first thing, out of the 100% that is being collected, the tax authority is going to keep a certain percentage for their collection fee. Then the federal government is going to take 15%.
Okay.
While state government is going to take 50%. And local government is going to take 35%. That's what we have currently.
Yeah.
So out of the 50% that the state now took, they will now still reshare that 50%. They will reshare that 50%, first thing, 50%, 50-50 on equal basis. They will remove 50% of it. All the 36 states are going to share it equally. Are you getting me?
Yeah.
They're going to share it equally. Then 30% of it is going to be shared based on population, while 20% is going to be shared based on derivation. Okay. That is what we have currently.
All right.
Are you getting me? So, but what they are proposing now, so before the controversy you talked about, I mean, sometimes last year, the controversy is around, there's going to be a derivation where the tax is being derived as against, and people are now beginning to say that that means a lot of states are going to lose their revenue sources because it doesn't favor me, because most of these money are not derived from my domain. Are you getting me? As against the consumption. So because what we have currently now is that the tax, especially the VAT, is being filed at the central location.
Okay.
Without having recourse to where those goods are being consumed. Because, for instance, most of the telecommunication companies are headquartered in Lagos.
Okay.
So what we have currently is that they file from Lagos.
Okay.
Meanwhile, most of the calls, all of the calls are not made from Lagos.
Yeah.
So now what the proposed one was saying as of last year is that where is that call being derived from?
Mm-hmm.
When you now want to file, you're now going to the telecommunication is now going to populate a data to say that okay, so amount of call is being made from so places, and this is the value, and as a result of that, you will not be able to get where the call is being derived from.
Mm-hmm.
Are you getting me?
Yeah.
So now, what really caused the controversy is that a lot of people feel that the derivation is not going to work for them in the sense that it will be difficult to track.
Mm-hmm.
It will be difficult to track, and because of the populations that some certain states enjoyed,
Mm-hmm.
it's going to still give them some certain advantage compared to other states.
Mm-hmm.
Are you getting me? So that is what actually brought about the controversy. And they feel that no, we cannot get this. Then the former proposer is also saying that the VAT rate is also going to increase gradually over the years.
Yeah.
7.5 to 10% to
Mm-hmm.
12%. Then at the end of the day, it's going to be 15%.
Mm-hmm.
So, and people feel that that's going to affect
Cost of living.
going to affect inflation.
Mm-hmm.
Because Nigeria is grappling with a lot of inflation currently, and you still want to increase the VAT rates over the years.
Mm-hmm.
So those are some of the things that caused the controversy. So, but looking at the current proposal that passed the second reading,
Yeah.
is to say that okay, federal government, you take 10%, states, you take 55%,
Okay.
and local government, you take 35%.
Mm-hmm.
So out of that 55% now, we are still now going to reshare that 55% among states, 50% equally.
Okay.
20% based on consumption, based on population,
Mm-hmm.
and 30% based on consumption as against derivation.
What's the difference? Consumption, derivation.
Well, technically, it's about where the goods is being consumed,
Okay.
not where it originated.
Okay.
Are you getting me?
Yeah.
So where is the like for instance like the telecommunication that I mentioned?
Yeah.
Where does before now derivation? Where does the call originated from? Who received the call? You know, there are two different things.
Yeah. Yeah.
You get who received the call.
Yeah.
Where does the call originated from? So that is so now in the real sense, in terms of goods now, who consumed the goods as against where does the goods being sold from?
Okay.
Are you getting me?
Yeah.
The person that consumed the good, where does it stay? As against, is the goods being produced in a certain state?
Mm-hmm.
So before now, it's about where does the good being produced, shifting to where does the goods being consumed.
Yeah.
Are you getting me?
Yes.
So technically, giving it a wide geographical spread to mean that okay, if I'm consuming a certain product, then the tax is going to be coming to my state.
Okay.
Are you getting me?
Yes.
So that is the difference between the former proposal and the current proposal.
But I have like an idea. Let me put it this way.
Okay.
So it lands softly. Why is the central collecting the tax and then disbursing it? Why are states not using their own tax they collect for their own development? So that's where I'm looking at. If it's going to be controversial, but
Yeah.
I'm just saying it. Like, if I'm in Lagos and I collect the Lagos tax, I should use it to develop Lagos. If I'm in Edo and I collect Edo tax, I should use it to develop Edo. Why do we have this system? And people make a case that, okay, it will cause a form of imbalance in the rest, that one state will develop at a very high rate, another state will develop at a very low rate. But the question is, we see that in UAE, Dubai is developing more than all of Arab Emirates. So why are we not in that same format? I don't know, just my thoughts. I know this is for the legislative heads.
So the issue is, I mean, UAE and Nigeria we're in different developmental stage.
Yeah, true.
To be honest, and you see what you just said. I mean, your idea has actually been previously practiced.
Okay.
Yeah. That, I mean, especially for the VAT system, that has been previously practiced. But there are some challenges as to compliance.
Okay.
It increased the compliance cost. Because, say, for instance, I have branches in about 30 states. So, in all of those 30 states, I'll be having tax consultants, or I'll be having tax units or tax department in all of those states that will be making the filing. Are you getting me?
Yeah.
As against when I have it centralized, where I will have to collect all the taxes, or like for instance, all the consumption taxes from all the 30 states into the headquarters and file it at once. So, but the point is, we can still actually get taxes that belong to certain states when you even file it in a centralized station.
Yeah.
In the sense that we can now have a column that shows that, okay, this certain state, revenue is earned from so amount of revenue is earned from a certain state, having a certain column to now have a total of the amount of revenue from that company. Are you getting me? So I'm just saying that we can still achieve getting the amount related to a certain company when we file centrally as well.
Okay.
It's just a matter of having a certain data set. A certain data set. So, but looking at what your idea is going to actually increase a lot of compliance costs for the company, and it's going to also create a lot of issues. Let me tell you one of the issues it's going to create. Like, for instance, in VAT.
Yeah.
No, value-added tax
Yeah.
is a consumption tax. So the way VAT is being done is that there is input and there is output.
Okay.
Output is what I collected when I sell. Input is the one I paid when I purchase. You get? I still pay, I pay VAT on the raw material, and I also put VAT on my finished goods when I'm selling it.
Yeah.
So I'm expected to net off the one I paid when I purchase from the one I want to collect when I now make the sales and pay the net.
Yeah.
So now imagine if a certain state I've collected the input, I've collected the tax on the input, and I'm now making sales in another state.
Yeah.
Are you getting me?
Yeah.
How am I going to retrieve the taxes I've paid in another state, especially the input? How am I going to retrieve it? And I'm now going to now net it off from the one I now want to sell to another state. If I'm the state, if I'm the state that I want to make sales from, obviously I'm going to raise some highbrow.
Yes, very well.
So the tax system is created in centralized way in such a way that is going to bring simplicity, because one of the canon of taxation is simplicity.
Okay.
Such that it will be simple to comply with. So, but having said that, there are still some certain taxes that have been collected by states.
Okay.
I mean, that doesn't go to the federal government.
Okay, that's fine. That's fine. Let's look at it from somebody running a store right now. I know that the threshold you have to reach before you start paying tax is 25 million. I think the new one proposed 15 million.
Yeah, correct. You're even more of a tax consultant.
If you get to 50 million, you can now start paying your taxes.
Yeah, correct.
So let's look at somebody that. How do you guys want to capture those people selling appliances in stores like Jalaba, spare parts in Ladikbo, that they have 15 stores, 20 stores, and they are churning hundreds of millions, but they are still not your multinationals at the forefront. So
you are absolutely correct. We have a lot of silent billionaires in those places.
You have a lot of
they're making their cool cash. And nobody is looking at them.
Nobody's looking at them.
Yeah, apart from the area boys that want to go and collect maybe store money and all of that. Yeah. I agree with you. So, but looking at the current tax reform bill, I mean, Nigerian tax reform bill that has passed the second reading already, they are trying to infuse technology on tax collection. So, because the tax reform bill is not looking at it's not looking at levying additional taxes when you look at it. Okay. It's only looking at expanding the tax nets. So you have just mentioned some of the people that will be captured. I mean, people that they're making cool money. Because when you look at it, the Nigeria tax system is actually creating a lot of economic distortion. Because tax authority, they chase after people that are already inside the tax nets. Okay. They go after them. And they will still go and audit them because I voluntarily came to comply. And meanwhile, some people have not even complied. And they are doing their business. Tax authority could not capture them. Until maybe one day, maybe they need tax clearance. And then I say, okay, let me go and comply. And they will now go and give somebody one small thing and give them tax clearance. So you can imagine the economic distortion, because for someone that has been complying and someone that has not been complying, the person that has not been complying will have more economic advantage than someone that has been complying. Yeah. So you see, that's one of the reasons why we need this tax reform bill, to ensure that everybody pay what they are supposed to pay. Because what the tax reform bill is trying to do is they are going to infuse technology, and it's now going to be gathering intelligence through their sales. But they will be mandated to have software. Yes, they will be mandated to have software that will be communicating with the database.
These guys barely know how to operate. They only know how to operate calculator and call on WhatsApp.
Well, that's where the consultant will have to make their own cool cash. Because they will have to engage people that knows how to do it.
Oh my days, man.
It's
creating job for IT, it's creating job for tax consultants.
Absolutely. They are going to have, and again, let me say this. It's possible to run business for some time and not pay tax. In the sense that if you are not making up to the threshold, or even if you are making losses, then you will not pay tax. Maybe you'll be paying minimum tax as against the regular tax you're supposed to be paying. So, because I've seen some company where tax authority had reached out to them for audits, and they had given them some bogus tax liability, and they are now running helter-skelter because they did not even prepare their books, do audit, and know the amount of tax they're supposed to pay. And when they eventually did, they saw that they have a taxable losses as against taxable profits.
Please? I'm having younger audience. So I don't want us to go too big on the grammar. What's taxable losses and what's taxable profit?
Okay, so you know that the tax is different from accounting. Although tax is a product of accounting. So when you have your accounting profit, there's still some things that are going to be adjusted, like your depreciation, your non-cash movement. Your depreciation are going to be added back, and some income are going to be exempted, and some things you are going to enjoy some capital allowances for you to arrive at your taxable profit or taxable loss. So taxable profit is actually your portion of profits, your portion of accounting profit that is liable to tax. Okay. Are you getting me? Yeah. So in that way, again, it can also be a loss. It's not all the time. It's not always profits. So your accounting profit can also turn to a taxable loss. That means that accounting profit has turned to a loss. Yeah. That cannot be taxed. Are you getting me? Yeah. So that way, for all those guys you mentioned now, technology are going to be infused to them that will now be tracking their sales. So say for instance, these guys, they are hiding. Obviously, they must have bought the goods maybe from a manufacturer or maybe from a dealer. The technology is going to be working from where they bought the goods. Okay. It's going to be working from where they purchase the product.
Yeah.
And it's going to track it from when that product.
How would it work from there?
Okay, so for instance, the person that sold the product maybe complies with tax.
Okay.
And I make a sales. They are going to record that technology is going to record that sales as their revenue.
Okay.
Are you getting me?
Yes.
Don't forget that there's going to be VAT output that is going to be infused on that product. And the person purchasing is a VAT input. Are you getting me? It's a VAT input. So at the moment when the person do not record, probably bypass that sales, the technology is going to be working with your bank accounts.
Oh. So all bank accounts will be linked.
Yes, exactly. The technology will be working with your bank account. So you now tell me, how are you going to make sales without getting it into the bank account? I know people will do that, but it's going to be limited.
Yeah, it is.
It's going to be limited because that's one of the importance of cashless society, where people will have to be forced to make transfer or use POS.
I can't remember the last time I had cash.
Same here too.
Yeah.
Same here too. So where people will be so from your bank account, those taxes are going to be pre-populated.
Okay.
Are you getting me? So that way, the only thing you can now tell the tax authority is, if otherwise, then you need to prove to me why this is not a sales.
Okay.
You need to prove to me why, okay, a money came into your bank account. Then the only thing you have to do, because the tax authority has already captured it as your revenue, you need to now prove to me that, okay, this is not a sale. Maybe I'm helping somebody to hold this money in trust and all of that. And at that point, you need to come with a lot of documentation for tax authority to exempt that kind of inflow.
I'm seeing a situation whereby if they implement this tax bill, there's going to be a lot of crackdowns. Yeah. And there's going to be a lot of auditing on personal accounts.
Yeah.
So that brings me to my last line of question. For somebody that's a freelancer, for somebody working overseas and their company is not situated in Nigeria, for somebody that is just selling, bringing in the money to their personal account, they don't have a business account, they have a personal account. Or if you want to transact, send to, and when you go there, you see Kelechi Ogoke and stuff like that. What's the tax brackets they fall into, and how would they, with this new bill, what's expected to happen to them?
Okay, well, let me just say, when you look at the average Nigerian, the bill is actually more favorable to them.
Okay.
Yeah, like for instance, a business that earns less than 50 million in revenue is totally exempted.
Okay.
While for an individual, they earn 800,000 per annum and maybe possibly 1 million, and you pay a rent of about 200,000, because there's going to be a rent relief, so you're also going to be exempted from paying personal income tax. So the people you mentioned, freelancer. So if freelancers, they try to incorporate a business and they earn less than 50 million, they will have to pay no tax.
Okay.
So obviously, if they do not incorporate a business and they are running as an individual, there's still also another part of the law that also covers them. Okay. Because one of the things the tax reform bill is trying to do is to make sure that Nigerians are actually very much available to the outside world for employment.
Yes.
Because the tax reform bill is going to say that, are you paying tax from your income that you earned over there? If you are paying and you are able to prove that you are paying, then you need not to pay tax here in Nigeria again.
Okay.
So that is what the tax reform bill is trying to do. But the moment you are not paying from your from the income you earn as a freelancer, then you might fall into the tax bracket. You might fall into the tax bracket because we have a situation where what is currently in operation now is that even though you are a freelancer and you are paying tax over there, you are still supposed to pay tax in Nigeria because the Personal Income Tax Act mandates that you earn the income while you are staying in Nigeria.
Okay.
It's about where you reside.
Okay.
So as a result of that, you are still supposed to pay the tax in Nigeria, unless you are staying in you paid the tax in where Nigeria have a double taxation treaty. Okay. I mean, a double taxation agreement we have with about 14 countries.
Okay.
So there are some concessions that have been given to, if you pay tax over there, you can get some relief here in Nigeria. And if their citizens also pay tax in Nigeria, their citizens can also get some relief in their country. So we have signed such agreement with about 14 countries.
All right, no problem. So let's round it up with this. Like I said when I started the show, I said you're one of the best accountants I've met because you're instrumental in the success. When I came into the company, they had your invoice was on the table and we facilitated it.
Yeah, absolutely.
So I saw in 2 years we were able to do 100 million because of that, the accounting system we put in place.
Yeah.
And it's one of the ways we do not focus when you are running a small business or when you are trying to go from a small business to a MSME.
Yeah.
So I just want to ask this question. How important is budgeting to a business? And also cash flow management. I just want you to touch on it. How important is it? How can businesses better manage their cash flow? And how can businesses design a budget that works for them so they can track their income and also their expenses?
I know that you must have heard the popular saying that goes like this, that cash flow is king.
Yeah.
And indeed, it's king. Because when you look at it, a lot of people, I mean, some businesses, when they fail to plan, then they plan to fail.
Yeah.
Because when you look at budgets, so budget is just like a plan into the future.
Mm-hmm.
And it is important that you plan into the future so that you will not you will not have so many surprises. Are you getting me?
Mm-hmm.
So as a result of that, budget is as important as your financial statement because it's actually going to contribute to your success as a company, as a businessman. Because when you look at budgets, I also want to urge so many businesses to inculcate the idea of doing budget because that way they'll be able to plan their spending at a certain period of time. Because sometimes, say for instance, you have like a million naira that you want to spend and you never budgeted for it. It is possible that you might have spent 700,000 out of impulse.
La vida loca.
Out of impulse.
Yeah.
And meanwhile, you have something else something more important that you're supposed to spend the money on. And as a result of that, you run out of cash flow. And so, budget is important to be done for you to be able to manage cash flow. I mean, I need to plan ahead. As a result of that, I need to now be able to manage cash flow because there's a situation whereby if I did not budget for a certain thing, then I wouldn't spend on it. So if at all I'm now going to spend on that certain thing, then it has to go through another approval to see the viability of what I want to spend on.
Yeah.
So, and that's the reason why we have other appropriation bills, to amend what has already been approved.
Yeah.
So it is important that you have an approved budget if you are running
a business.
Yeah, a sustainable business.
And you have someone that keep you accountable to that budget.
Yes, absolutely. Some that keep you accountable.
So every Nigerian business owner should have a budget.
Yes.
To have a budget and also have an accountant friend.
Not just a friend, they need to pay the accountant.
We'll drop your details when we premiere on YouTube, so people can also reach out to you.
Yeah, absolutely.
Then there's room for you to ask questions once you watch this episode. Ask your questions. I'll make sure you get to see the questions so you can answer them.
I'll be on the comment section as well.
And stuff like that. So the goal is to make sure that people have enough knowledge to run their business better, because once you run your business better, we can grow the economy.
Absolutely.
Once we grow the economy, we can take out more people from poverty because we employ people and pay them from minimum wage upwards. So it's a great conversation. So thank you for being here, my brother.
Yeah, thanks, Kelechi, for having me. I mean, I think it has been a wonderful conversation. Like you wanted it. I don't think, I don't think it's a structured one, like you said. So
yeah, so it's fine.
yeah.
Thank you.